Gold had a good run from the late March lows into the beginning of June, trading up to its best levels in 4 months. So it looked strong, but June saw the price do something of a major reversal. Slide back, spent most of the month in reverse, and has, at the time recording, trading back to its worst levels for more than a couple of months. So does this mean that gold is set to plunge further from here? Or actually, is this setting up an interesting buy opportunity for the weeks ahead? Some big moves in June for the price of gold. You can see here the price did punch as high as about, $1,916 an ounce beginning in June. But at the time of recording, it's still falling, trading at the moment just above 1,750, which puts it on its worst levels since the middle of April. I think what's interesting about gold, if we take this chart out, the lows that we saw in March when the price traded down to 1676, 1677, something of a double bottom, the price moves higher. And we are now, within $80 or so of those lows. So for me, it really is bounce or bust time for gold in the next few days, next couple of weeks maybe. So as usual in this video, I'll talk a bit about what's been driving it, why we've seen this reversal, the levels to watch, then we'll come back and see if there's a trade to do down here. Hello, I'm David Jones from Capital.com, and I thought it was time for an update in gold. Given the volatility that we've seen in June, it's been mainly one way as well, the trend for gold, but more of that in a couple of minutes when we jump on the platform. So as usual, I'll talk about what's been driving it, we'll look at the levels to watch, then we'll go back and see if there's a trade to do down at these levels. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. And of course, every Friday at 2:30 UK time, we do a live stream from our YouTube channel where I look at our usual mix of markets and lots of questions from people attending live to have a look at different markets as well. If you're subscribed with the alarm bell thing clicked, you get a notification off YouTube just as we're about to go live. Right, let's get into it and take a look at gold in a bit more detail. So the story since last summer has been, we saw all-time highs back then in the summer of 2020, but there had been a lack of momentum since then. Gold just unable to hang on to any rallies and just in this big correction since those summer highs. But things had got a lot more interesting coming into June. We saw the price of gold trade up to its best levels since January of this year, so up at a 4-month plus high, and it looked like maybe that correction was finally coming to an end. But June didn't turn out that way. It got really heavily hit during the month of June. Big slides, as you can see on the chart here, and at the time of recording, it's down around 8% from those highs hit right at the beginning of the month. Part of the reason is a comeback by the US dollar. We had that announcement from the US Federal Reserve a couple of weeks ago, the US Central Bank, bringing forward expectations when interest rates would rise. We saw the US dollar rally and plenty of other assets fall pretty sharply, and gold was no exception to this rule. Plus, of course, if you look at stock markets, already this week we have seen yet again the likes of the broader S&P 500, the tech-focused NASDAQ, hit fresh all-time highs. So there are, and continues to be for now, more attractive assets out there, I think, to investors rather than putting their money in safe old gold. But it does look like, if we wind the clock back to March, we saw an important base back then. At the time of recording, the price has been knocked back within $100 or so of these March lows. So I think maybe there is an opportunity down here. Let's look at the levels to watch, then we'll jump back onto the chart and set a trade up. So the high beginning of June, $1,916. I think if we're going to see a recovery from here, that's probably a good medium-term target. We've got some hurdles along the way though, highs left on the way down. And for me, the really big level to watch for the next couple of months is those March lows, around about $1,677, that sort of area. But as usual, to put some color on these numbers, let's jump on the platform and see if there's a trade to do. So as usual, as it's a gold video, we have to start with a long-term trend. Going back to August 2018, we've been looking at this for as long as we've been doing these videos, so a good few years now. So there's our long-term trend from 2018. Did a good job on the way up. The price accelerated away in March of last year. didn't get that close to it, came, I suppose, within $100, $150 or so in those lows in March. And this is where we are now. That trend is coming in around $1,600 an ounce on gold. So if it falls a lot further from here, we start looking at that trend. But for now, I think we need to be aware that the trend for the last, 30 months or so, maybe a bit more, is up. Although you can see since those highs last year, those highs in the summer last year, we have been in this correction. But more of that in a second. Let's take a look at the RSI. So this is our RSI, 10-day RSI on the price of gold. Overbought, oversold indicator, as I often say. In strong trending markets, the price can reach an extreme too quickly. We saw that on the way up from May, where it went overbought in early May and carried on pushing higher. And we've seen it on the way down, went oversold on the way down ahead of 1,800, has stayed oversold, but the price has dropped another $50 or so from where we are now. So it's saying, it's very extreme down here, and we can see that from looking at the chart. But I do wonder if there is a trade to do. Let's take a look at the price action. This move in mid-May did look like finally it was shaking off this correction from the all-time highs. And we broke out through that downtrend, broke the old highs from back here in late January. But since then, it's done a handbrake turn. We've seen it plunge back to where it is now, losing, about $160 from that early June high set on the 1st of the month. So I think there's a couple of ways of looking at this. First of all, you could take the view the correction is going to continue, and the target would be a run back to at least the old lows, so the March lows down around 1677, that sort of area. Or you could take the view that actually it has broken out this slide it had been in since August, and the move we're seeing now is just a correction as part of a new trend. So I think there are arguments for both. If you were going to go short from here, where would your stop loss go? For me, the closest I'd want it would be above those highs. And they're only the highs from the last couple of weeks or so, around 1,800. Perhaps let's flip this over to a shorter term chart. So I've got this on a 4-hour chart now. So each candle represents 4 hours worth of trading. And you can see the price is pretty weak. Here are these old highs where I said, if we were going to go short now, that's where I'd be putting my stop loss. But I'm quite tempted to be a buyer because we have got such big support down at these levels, around 1675, 1680. I do wonder if there is a buying opportunity. We've got the next big support coming in around 1720. So what I'm going to do, I'm not going to buy where the price is now because it's a bit like catching a falling knife. I'd rather sit here and watch it for a couple of days and see if we get some strength coming in. Of course, doing these pre-recorded videos, we don't have the luxury of sitting here for a couple of days and watching it. It would make for a long video. So what I'm going to do, I'm going to put an order in to buy. And I'm going to put an order in to buy ahead of that old support, that old sort of 1720 support, that sort of area. And I'm going to put my order in at 1740. So if the price slips to 1740, I'm going to be a buyer and I'm going to flip my stop. The closest I would have my stop on that trade would be the other side of 1720. For me, that's a bit too near. So what I'm going to do with my stop, I'm going to go the other side of these lows. I think it's a big level. I think if we see these lows break, then gold will be at its worst levels since June of last year. So we're at a 12-month low for gold. So I'm wondering if we are going to see the level hold. So I'm going to go 1660 for a stop on gold. Let's set the trade up. So I'm ready to go. The price at the moment is trading at 1755. I'm going to be a buyer if it gets to 1740. I think there's a reasonable chance of that getting filled, given the weakness at the moment. If that order gets filled, put a stop at 1660. So the other side of these lows. So it would mean it's heading to new 12-month lows and I want to be out of the trade. And really my thinking here is I'm expecting to see some buying come in ahead of these old major lows from earlier in the year. We'll see how it turns out, but I'm quite happy to leave the order there. Let's place the order. Just leave that limit order there sitting in at 1740, see if it gets filled and see if we see something of a turnaround in the price of gold. So if I look at the positions, we've got no gold positions at the moment, but if I go into orders, there's the order I just placed. So buying 4.4, if the price drops to 1740, if that order gets filled, put a stop loss $80 away down at 1660. And I think we're in for an interesting month. I think it could well be bounce or bust time for gold. That longer term trend is still up. I think we've seen clearly a sizable decline during June. I do wonder if we'll see some buyers come back in. Let's wait and see how the month turns out, but it's going to be a really interesting one to keep an eye on gold. That's it for the update in gold. We'll come back to it during July, see if anything's changed. But for now, we will leave things there. So from me, David Jones and Capital.com, good luck with your trading. For more trading videos just like this, please subscribe to our channel.